There are things that can stop the Great Depression. It's not a foregone conclusion if you think that governments around the world will go, wait a minute, we need some fiscal responsibility. Let's not just keep borrowing and borrowing and spending and thinking somehow it doesn't matter. If that would occur, then all of a sudden you would find probably just a recession instead of a Great Depression. But do you think that will actually occur is the question. And most people would agree with me that not likely, not in the next 7 years, which is, it actually has to occur in the next couple of years before it can have an impact. The other thing that could occur, and this is dark, you may not like this, is that part of this is because of the sheer amount of baby boomers. And if we baby boomers, because I'm a baby boomer, so I'm speaking of my cohort, were somehow to not require government services in the next decade, there would be a lot of pressure off governments around the world to take care of us. But not likely to occur that all of a sudden, millions upon millions of us will be gone. And therefore, that's a drain that cannot be avoided as we go forward. It would not necessarily delay or do away with, but could mitigate, I think you use that word, mitigate the depth of the decline. It's called the 1 cent solution. It's something that we came across years ago. And I think it's fallen out of favor in Congress. At one point, there were 86 congressmen who were supporting this bill, but I think it's long since fallen out of view. The 1 cent solution said that the federal government, and it'd be a good idea for state governments too, would just lower their budgets by 1% a year. And just look for the waste, look for the redundancies, look for the things that they don't need to spend money on and reduce it by 1% a year. And if they did that, it doesn't eliminate the debt, that it keeps it from growing, because revenue would keep going up while the deficit in the budgets would go down. And therefore, investors around the world, bondholders around the world would go, they're working on it. And it's sort of like an individual creditor. If you just keep running up the debt, then people get really nervous about your future. But if they see you're working on it, you're fiscally responsible, you're reducing your debt, they give you a lot more slack. And that's one of the things that could make a difference also is the 1 cent solution. Not likely to happen. It sounds like a good idea to just tax Social Security. The reality is Social Security is already taxed. It's people have this conception that you don't pay for Social Security, pay tax on Social Security. You do, unless you're below a certain income line. But for a lot of Americans, and for the ones that they worry about are wealthy Americans getting Social Security tax-free, we should be taxing it, they are paying taxes. And in a lot of cases, don't get much left after they're done paying the taxes on it. So it's a specious argument that people have. Along those lines, some people say, well, we should just raise taxes now on Social Security so that there's no cap on how much people pay on Social Security. We've run that math here at ITR. Doesn't change anything, might delay it 18 months in terms of the bankruptcy that we're on our way to. The only real solution is to raise taxes on everyone paying Social Security, no matter who you are, and there'd be such a taxpayer revolt over that, it would never happen. So we're stuck with the fact that the Social Security problem goes away, again, when my generation goes away, which is the late 2030s. Your generation and millennials and Gen Zs, they'll have Social Security and they'll get to decide what it looks like, what's covered, what's not. But until then, my generation, to make sure you don't touch it. And therefore, we're on a path where it gets awfully expensive for you to take care of us. It's really straightforward. Jane and John Q. Public can protect themselves doing things that we were told that we should do. First, live below your means so that you can take what you're not spending on 3-week vacations, take 1.5 weeks, and instead of getting a BMW, get a Chevy, that type of thing. And take that difference and put it into equities or put it into real estate, because those will go up in value with inflation, real estate especially. And if you have rental property, you'll get more rental income through the next 7 years. You'll create some real wealth for yourself. And in equities, you'll create some real wealth for yourself. But if you're living to your max, you'll end this decade with nada. And when you have nothing, there is no wealth creating opportunity in the Great Depression. It just becomes that much harder to live when your pay is cut and on it goes. When you have wealth, even a little bit, by the end of the decade, you can turn that into 2 to 4 times as much wealth by the time the Great Depression's over. So let's say you can scrimp together $500,000, which is a good amount of money. That you could safely say to yourself that I will walk out of the Great Depression with $1 to $2 million, which is not a bad deal at all when you think about it for John Jane Public. The best thing to do is to make sure that you have two income streams into your household, even if you're a household of one. So that way, if your job says, we got to give everybody 10% pay cuts, your second stream is still there. And that can be passive income, it can be rental income, it can be you sell Tupperware, whatever it happens to be, you have two streams of income. Or if you have a significant other, you make sure your significant other is in a different part of the business cycle than you are. I'm going to start an app called mismatch.com just to make sure that people don't the same business cycle. Those are the types of things you want to be thinking of, and what careers are best for the kids. I mean, all that's in the book, and it's a long answer, but there's planning that needs to happen at the individual stage too, instead of just going whatever and walking blindly into this wall. As far as the business owner goes, that's a great opportunity to be thinking differently. Forever, the mindset has been, how am I going to grow? Okay, you get to a Great Depression, the question then becomes not how am I going to survive, but how am I going to hold my profits at a reasonable level and hang on to my company at a reasonable level and gain market share while my competitors are dying because they didn't see it coming. Because they will be falling left and right that didn't see it coming. They're going to run out of cash. They won't have the right products. They'll be selling the best when they should be selling good. They'll have the wrong message, wrong competitive advantages. I mean, they're just going to mess up royally. So if you're prepared with the right message, with enough cash, with the right products, you're going to find that, hey, this isn't all so bad. I'm not growing like I was beforehand, but I'm doing fine. And I'm paying my employees, and people hold on to their health insurance because of me. And it's a pretty good thing to be prepared and feel good about what you're doing in life as you take care of the people around you to the best of your abilities. Those are some of the things you have to think differently about, though, because our whole motive has been, how big can I get? As opposed to, how can I prosper through this and let market share take care of my growth, as opposed to organic growth through innovation, for instance. That's a more challenging situation than being in business. The reason is, when Brian and I wrote our first book, we looked at the not-for-profit segment and how it related to the economy. We looked at everything from health entities, mental health entities. We looked at Red Cross. We looked at American Cancer Society. We looked at a bunch of them. And what we found out is giving goes down when the economy goes down. Incomes go down or stagnate, while stock market values go down, equity values, people don't feel as wealthy anymore. That's a real problem for them. And if they live hand to mouth off of regular donations from people, they're going to find themselves starved, and they won't be able to serve the public the way they want to. Their altruism is wonderful, but sometimes their ability to see the future isn't as good as their heart. What they need to do, and what I've helped instruct some not-for-profits to do in my years of consulting, is to say to them, you want the hand-to-mouth, you want that monthly money coming in, but you really want to push estate planning so that when people pass away, they leave you a trust, so that you can build up a war chest, so that you'll get interest on that will carry you through the lean times, so that you're not living through peaks and valleys. You can just work to leveling that out. And you make it a function of your whole message. Help us for the long haul, for the years to come, and leave a legacy, and all the things that go along with marketing, that point of view. If you do that, then you have staying power. And Brian and I are convinced that in the Great Depression, it'll be a wonderful time for not-for-profits of all kinds to make a huge difference in this world, and a real difference in people's lives, and save lives. But they have to be there to do it. So they need to prepare understanding, gee, most of my revenue comes from, I can't depend on that, therefore I must think of a new plan. No way to tell. It may, because it'll be really hard for them to borrow, but an end is where I'm stumbling here, because it could suspend it or reduce it, but then the next gen, which would be millennials and Zs at that time, could forget the lessons of the Great Depression, and in a few short years start doing a little borrowing again that just begins to run it right up again. So I'm stumbling over it ends it. It could put it to sleep for a little bit, but then it could come roaring right back again, because it's an easy way to do things, is to go into deficit spending.